This is Johan Lewis with Cambridge Assessment International Education's Cambridge IGCSE and O-Level Accounting by June Baptista. This is the book published by Hodder Education, and we're going to start it off right now with the first chapter. So starting with section 1, the fundamentals of accounting. So this is going to cover two different chapters. This video is for chapter 1, and then afterwards we're going to do chapter 2. Chapter 1 is the purpose of accounting, and chapter 2 is the accounting equation. This section of the syllabus introduces you to what accounting is, the purpose it serves, and the important role it plays in the world of business and finance. Accounting is also the foundation on which modern-day record keeping, the double entry system, is based. This section explains how bookkeeping is different from accounting and the accounting equation. So chapter 1, this video is covering chapter 1, the purpose of accounting. So by the end of this chapter, you will be able to understand and explain the difference between bookkeeping and accounting. You will be able to state the purposes of measuring business profit and loss. And you'll be able to explain the role of accounting in providing information for monitoring progress and decision making. Let's go ahead and get started. So starting off with the difference between bookkeeping and accounting. Bookkeeping is largely concerned with the development and maintenance of accounting records. It involves the detailed recording of all the financial transactions that have taken place over a period in a business. Every transaction of economic value should be recorded, otherwise it could get forgotten and omitted. Bookkeeping is important as it ensures the records of all financial transactions that a business has undertaken are accurate, up to date, and comprehensive. Accounting, on the other hand, involves collecting, recording, classifying, summarizing, analyzing, and interpreting financial data. Accountants use bookkeeping records to prepare financial statements at regular intervals. These statements are then analyzed and interpreted to aid decision making. So, definition of accounting. Accounting is a process of A, collecting and recording financial data, B, classifying financial data, C, summarizing financial data, D, analyzing financial data, E, interpreting financial data, and F, communicating financial data. So these are all the processes that accounting encompasses. Moving on. So here are some key terms. These are the definitions that you need to know. Bookkeeping involves the collection, recording, storage, and retrieval of financial transactions of a business. Accounting is the process of collecting, recording, classifying, summarizing, analyzing, interpreting, and communicating financial data in order to allow the users of accounting information to make informed judgments and decisions. Financial statements are made up of an income statement and a statement of financial position. Financial data refers to any aspect of a business that can be measured in terms of money. For example, sold goods for $400 cash. So now let us examine each step of the accounting process more closely. So we have A, collecting and recording financial data. Every business needs to collect financial data and then record this data. The data comes from the transactions which a business undertakes daily. For example, sold goods to Amigo Limited for $400 on credit. The financial data that would be recorded from this transaction would be an increase in the total sales and an increase in the amount owed by customers to the business. B, classifying financial data. After the financial data has been recorded, it is then classified into groups. For example, assets or liabilities, income or expenses. To continue with the previous example, an increase in total sales would be classified as revenue, and an increase in the amount owed by customers would be an asset called trade receivables. Summarizing financial data. Once financial data has been recorded and classified, it is summarized for the benefit of the people who are interested in the business. People who are often referred to as interested parties. One example of a summary is the income statement, which calculates the profit that a business has made. D. Analyzing financial data. Analyzing means examining something in detail with the intention of explaining and interpreting it. For example, on their own, figures in the form of profit or loss are not as useful as analysis using those figures and accounting ratios. And we're going to see more of this in chapter 21. Analysis allows comparisons between years and between competing businesses. For instance, based on these comparisons, important decisions can be made and business strategies can be planned. Think about it. What if a business has valuable, highly trained employees? The employees are not part of financial data and therefore get overlooked. Do you agree? And if you agree, how important is this omission? Here's another one. Think about it. Ian scored 10 marks on his accounting test, while Yagmar scored 50 marks in her test. Who performed better? It may appear that Yagmar has done better. However, Ian's test had a maximum mark of 10, while Yagmar's test had a maximum mark of 100. Converted to a percentage, we can see that Ian has done better with a 100% score, while Yagmar only scored 50%. This shows us that standalone figures do not give us all the important information. The figures need to be converted into ratios or percentages in this example in order to fully make sense. Work with a partner to answer the following questions. Ian Toys made a profit of $50,000 and Yagmar Toys made a profit of $150,000. Which business is more profitable? Do you have enough information to answer this question? If not, what additional information do you need? Moving on to letter E, interpreting financial data. Once the data has been analyzed, the interested parties need to interpret the data. Interpreting is deciding what the intended meaning of something is. For example, a manager will use information from the analysis of figures in the income statement to make important decisions. If the business has been consistently profitable over the past few years, they may decide to expand the business's operations. See more in chapter 22. F. Communicating financial data. The summarized data is then made available to the users of accounting, also called the interested parties. For example, in the case of limited companies, see chapter 17, shareholders can use the information to monitor how well their investment is doing. Think about it. In pairs, decide who would interpret the financial data of a soft drinks company. Okay, so activity 1. First part is to state whether or not each item is financial data. A is cash that a customer pays for services received. B, well-trained employees. C, a government tax proposal on fizzy drinks. D, the purchase of a motor van. E, the sale of equipment. F, the location of a restaurant which brings in more customers than its competitors, and B, good suppliers who deliver quality goods on time. Remember the definition of financial data before answering this question, whether you stating whether or not each item is financial data. Number 2, copy and complete the table below and place a tick in the appropriate column to indicate what each activity represents. Each activity may represent classifying, interpreting, or communicating financial data. And the activities are, the first activity is deciding whether an item involved in a business transaction is an asset or a liability. The second one is publishing the income statement on the business website. The third one is measuring the profitability of a business using ratios. The fourth is deciding whether an item involved in a business transaction is an income or an expense. The fifth is measuring the liquidity of a business using ratios. And the final one is sending the financial statements of a business to shareholders by email. So are each of these classifying, interpreting, or communicating financial data? Moving on, the purpose of accounting. The purpose of accounting is to provide important financial information that helps interested parties to monitor progress. Managers can use financial data to analyze the opportunities and challenges that a business faces. Accounting also helps with good decision making. For example, if profits have been falling, the income statement reveals the reasons why. Perhaps expenses have increased, in which case managers will want to make important decisions about which expenses to decrease and how. Accounting can also inform interested parties what a business is worth. The statement of financial positions, which we will see in Chapter 2, keeps interested parties informed about the assets, liabilities, and net worth of a business. Key info. It is the purpose of accounting to take financial data, which may be obtained through bookkeeping, and convert it to a form that can be used for good decision making. So, the purpose of measuring business profit and loss. One of the main aims of a business is to make profit. Businesses need to be able to measure this profit. It can be then compared with profits of previous years. If it is falling, owners and managers will want to either decrease expenses or increase revenue. Because the income statement records the various expenses incurred, managers can analyze them to look for cost-cutting measures. If a business has been consistently making a good profit, managers may want to grow the business by expanding its operations into other markets or by increasing the product range. Business profit can also be used to compare with a competitor's profit. If a business is making a good profit, but not as much as its competitors, this gives managers a reason to take steps to reduce expenses or increase revenue in some way so that profitability improves. They could also increase income by advertising more widely, for instance. The financial statements also help to measure a business's ability to pay the highest returns to its owners relative to its competitors. Think about it. Would you compare a vegetable vendor's accounts with those of an appliance retailer? Give reasons for your answer. Activity 2. Read the following case study and then answer the questions below. Amrita is a baker who is opening her first shop. In order to keep records of her transactions, she plans to employ a bookkeeper. The first part is to explain why it is important for Amrita to keep financial records of her business transactions. The second part is to explain why a bookkeeper may be willing to work for a lower salary than an accountant. The third part is to advise Amrita whether she should employ a bookkeeper or an accountant, and give reasons for your answer. The role of accounting in monitoring progress and decision making. Users of accounting information, interested parties. Every business has interested parties. Interested parties are the people or firms who use the accounting information to monitor the progress of the business. This helps them to make important economic decisions. Examples of interested parties are owners of a business. They will want to know how well their investment in the business is doing. Is the business profitable enough? The owners will also want to know what the net worth of the business is. Prospective investors. They like to know how well their investment will do in the future by studying present and past accounting records of the business they are intending to invest in. Good profitability and increasing net worth are strong signs that a business will be a good investment. Study tip. If a question, for an example, an exam question, if a question asks you to list 3 interested parties, read the context in which the question is asked and choose the most relevant of the 5 interested parties listed on this page and the next. If a business is a sole trader business, for example, that does not want to expand, then it will not have any prospective owners. Bank manager. A bank manager will ask for and use past and present accounting records before granting a loan or an overdraft. A business may not have enough money or cash flow to pay the interest, and this could be the reason for the bank to not grant a loan. Also, if a business has a lot of existing long-term loans, banks will not be very willing to lend them money. Trade payables, creditors. A lot of transactions are on a credit basis. This means that payments are made sometime after the transaction has taken place. As a result, a business could have a number of people or businesses that it owes money to, called trade payables. Suppliers and other creditors of the business will want to know whether they will be paid on time, if at all. Financial statements give them this information. The government. The government likes to know what profit a business has made in order to calculate the amount of tax that the business has to pay. Key term. You'll need to know that trade payables represent businesses or individuals to whom money is due for services or goods supplied to the business. Here we're going to show you that the purpose of accounting. The business organization is going to use accounting to create financial information. Interested parties, including the owners, prospective investors, trade payables, the government, and bank managers, want to use accounting to monitor and to make good decisions. And the information that they're going to need is about the profitability of the company, the net worth of the company, or how much the company is worth, the tax liability, especially the government, which needs to know how much money that the company will have to pay in taxes, and the ability to pay debts, especially bank managers will want to know this information. Activity 3. Explain why financial information needs to be communicated to the interested parties of a business. List at least 4 interested parties in your answer. The second part to this, Amenco Limited is a business which sells ready-made clothes. It has been in business for 10 years. Most of its customers pay by cash or credit card. However, its suppliers allow 1 month's credit. Apart from trade payables, the business owes its bank for a loan it took 5 years ago. Being a limited company, Amenco Limited must pay tax, which is calculated on the amount of profit the business has made. List at least 4 interested parties of Amenco Limited. So this is an example of an exam type of question. With this information, list 4 interested parties of Amenco Limited. Finally, we are going to start with some exam style questions. So we are done with the information needed for chapter 1. These are the types of questions that you may see on an exam type of situation. The exams are both multiple choice and written answer. So the following multiple choice questions should be completed within 5 minutes. 4 possible answers are given for each question, and you must choose the one most appropriate answer. So the first question, number 1, what is accounting? Is it A, a chore, B, a process, C, a system, or D, a task? Number 2, which is the correct order for the steps in the accounting process? Is it A, collecting, summarizing, analyzing, interpreting, communicating? B, collecting, summarizing, interpreting, communicating, and then analyzing? C, summarizing, collecting, analyzing, communicating, and interpreting? Or D, summarizing, collecting, interpreting, analyzing, then communicating? Number 3, which value is not included in financial data? A, the good location of a cafe which has a high volume of foot traffic. B, the payment of an invoice totaling $400. C, the sales for the month of June of $5,000. Or D, the value of a motor vehicle that a company owns. Number 4, which statement is true? A, accounting is part of bookkeeping. B, accounting requires the skills of an expert accountant. C, bookkeeping includes activities such as analyzing and interpreting financial data. And D, bookkeeping requires the skills of an expert accountant. And number 5, what is not a purpose of measuring business profit or loss? Is it A, to compare a business's profit with the profits of its competitors? B, to compare a business's profit with those of any other business? C, to take steps to reduce losses? D, to compare the current year's profit with last year's profit? The mark allotted to the structured question below is a guide to the length of time that should be taken to complete it. For example, at the bottom you can see down here it shows that this is a 6-mark question. So it should take roughly about 6 minutes if we're going by the same guideline that this should take 1 minute. So number 6, Andrew McDonald is a sole trader. The following people are interested in the accounts of his business. A, Andrew McDonald, the owner. B, a potential partner. C, a loan creditor. D, bank manager. And E, a trade creditor. Copy and paste the following table to show which people would be especially interested in the different features of the accounting records of the business. Each of the 5 parties listed above should not appear in the table more than twice. And the table is here. So the features of the accounting records: whether the business can pay interest when it is due, the market value of the assets that the business owns, whether the business is profitable, and whether the business has enough liquidity. Finally, we have some chapter review questions. This reviews the information. So we're done with the exam style questions, but this is now information to review what we have learned and the information that you need to know going forward into chapter 2. So, number 1, state what is meant by the term accounting. Number 2, explain the difference between bookkeeping and accounting. Number 3, state the purpose of accounting. 4, state one purpose of measuring business profit or loss. 5, complete the sentences below using the following words: recording, bookkeeping, financial, classifying, owners, interpreting, trade payables, analyzing, decision making, bankers, and communicating. And the sentences you'll be completing are: A, blank is concerned with the maintenance of accounting records. B, blank, 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 and blank make up the process that is called accounting. Remember the order. Blank, blank, and blank are possible interested parties in a business. D, the purpose of accounting is to take blank data and convert it to a form that could be used for good blank, 2 words. Number 6, list at least 3 interested parties of an internet provider and explain why accounting is important to each of them. Number 7, copy and complete the following table by entering true or false for each statement. The first statement: there is no difference between accounting and bookkeeping. The second statement: accounting is only carried out at the end of a financial year. The third statement: managers can use financial data to define and analyze the opportunities and challenges that a business faces. 4, the statement of financial position is used to calculate the profit of a business. 5, business profit is often compared with a competitor's profit. True or false? So we are here at the end of the chapter. This is your revision checklist. So in this chapter, you have learned the definition of accounting, the purpose of accounting, the difference between bookkeeping and accounting, the purpose of measuring business profit and loss, what financial data is and what financial data is not, and the importance of accounting to a business and its interested parties. If you feel that you have not learned any of these, be sure to rewind and rewatch those appropriate sections. Make sure you understand all of this before moving forward to chapter 2.